Jared, we are just around 10 seconds away from this opening bell. What do you think the number one thing investors are watching? Because the Dow futures, like I said, off just around 150.
Yeah, lots of bad news, especially out of Asia overnight, not to mention the HSBC slashing 35,000, but could have been worse here. Not looking particularly rosy going into the open.
And here's the opening bell at the New York Stock Exchange. The markets will open. The Dow will open down about 144 points. Would have expected more of a downtick off that Apple warning. Nonetheless, Dow will open down about now 163 points. And here are the headlines making the first trade front page. First up, Apple is warning over the coronavirus. It says it won't meet earlier revenue projections because of the virus disrupting production and demand in China. Walmart reported a weak fourth quarter as soft demand over the holidays ate into its bottom line, and HSBC is slashing 35,000 jobs. Its profits sank 53% last quarter, and now it plans to scale back operations in the U.S., Europe, and its investment bank. Quincy, let's just start here with Apple. I thought this would be the news that would take down the market a lot more than 163 points on the Dow.
Well, truly, I mean, it was interesting because yesterday, obviously, we were closed, but Europe was up. There was a sense that the Chinese or the authorities are pushing in more stimulus. That helped the markets. And then suddenly, as the Apple news hit the wires last night, the futures just turned dramatically. And Europe got hit, Germany, all of those that are dependent on China for trade, but also for supply chains.
How do you explain that resilience?
It's that the notion is that this too shall pass, that this will end. And as far as Apple is concerned, on the demand side, once the stores open, once people start going shopping, the expectations are that they'll be okay on that. But the supply side is what is obviously bothering not just Apple. We're going to hear more and more. You know, it's interesting, Walmart came out today. Walmart has a lot of manufacturing still in China. And we expect to hear more from other companies this week on the retail side as far as supply chains are concerned.
So, Rebecca, there's been lots of concerns that we're hearing from a lot of these big retail names. We had the latest tech giant, Apple, come out with its news today. Why do you think, from your perspective, I know you're in wealth management dealing directly with clients, why do you think that U.S. investors have been able to be so resilient at this point?
Well, I mean, I think there is a positive. You know, Apple has already reopened all 5 of its Beijing stores, although with, you have to take your temperature when you go in and they're controlling the visitors. So they have that. They're expected to open one of the 7 Shanghai stores that they have on Saturday. So apparently Apple is sending a signal that they're ready and open for business. Obviously, all of their supply chain manufacturing operations are back in business. They basically said that they just haven't ramped up as fast as they said they expected them to. So we are starting to see the impact of the coronavirus, and yet there's still some positive silver lining in the sense that it is, from what we know as of this point, somewhat containable. It's just that their January 28th number of $63 to $67 billion of revenue Q2 is going to be a miss. What I do worry, I agree, is that the supply chain, analysts project that we only have a 30-day supply chain before that starts to get disrupted, and that would be a much bigger problem.
Rebecca, the way I'm thinking about it, the next month could be bad in terms of macro data, company-specific data. Are you making any changes to portfolios to get out in front of some of that stuff?
Right now we're seeing real resiliency, so I don't think that we need to make preemptive moves yet. But I am concerned about luxury brands, travel, and of course the supply chain affects every industry. It's kind of interesting and a little bit ironic that we had an 18-month trade war where CEOs could have revamped trade lines and routed them outside of China, and if they didn't, they now have to deal with the coronavirus. And Apple obviously is one that is heavily dependent, 100% almost, on China.
Quincy, do you think when you take a look at U.S. stocks where we're trading right now, not too far from the all-time highs, do you think U.S. stocks are overpriced at this point?
Well, no. Ironically, what you want to do right now is be more U.S.-centric, and that's what you're seeing this in the markets. And also, if you're worried about global growth slowing, what you want to do are go in those companies that do well regardless of the macroeconomic backdrop, and those are U.S. large-cap names. But I do think that we may see the market broadening out in order to compensate for Apple and compensate for any many other companies that suggest their revenue growth is going to slide because of the effect of the virus. And, healthcare, for example, I'm just looking at healthcare, very domestically oriented. And yes, the political implications are there, but in small cap healthcare, they should even do better now than the large cap healthcare. But those sectors that are not predicated on global growth, that are much more domestic, I think should do well.
Quincy, if a warning from Apple can't take down the market, what could?
I don't know that this is a global pandemic, the likes of which we've never seen. That cases sprout up across the U.S. and we all start being, quarantined. That obviously would, because consumer spending is still 68% of our economy.
I don't want to be locked in the room, Quincy.
I don't want to be locked in the room.
Let's just leave it there.
This is a wonderful headquarters.
Yeah, this is really nice.
It's great, but I want to be able to go back to my house. Yeah.
Jared, in terms of, I know you have a lot of, you have the Dow stocks up there on the board. In terms of what you're seeing, there's still a significant amount, kind of going off of what Sazi was saying, are still moving to the upside today. Why do you think investors are able to shrug off this bad news?
Well, I mean, look at the where are you going to put your money? To Quincy's point, people are piling it into the U.S. right now. The U.S. dollar is up, and also into bonds. We just got the Global Fund Manager survey from Bank of America earlier today, and cash levels are at the lowest level since 2013 now. And investors, these fund managers, can't get enough of growth stocks and defensives, and that's been the play for at least since the beginning of the year. And today, right now, we have Microsoft. It's up about 0.4%. Of course, Apple down over 2%, but Walmart was red in the pre-market after announcing its earnings. It's up about 0.8% right now. Just looking at the sectors that are leading today, communication services, followed by utility, discretionary, materials, healthcare. Interesting mix on the leaderboard there. To the downside, tech off because of the Apple situation, and energy as well, which is still under pressure.
Rebecca, where are you most overweight in your portfolios in terms of sectors or even specific stocks?
I mean, I think obviously the growth stocks are really still where the play is. And so you've got tech, you've got healthcare. Interesting thing about Walmart is we saw the earnings miss, and obviously they were trading down, but then they announced a 2% dividend increase for this year, 47th consecutive year in a row. So this is the kind of resiliency that we're talking about. And the market digests the information, it's negative, and then turn around and okay, it's positive. And so I think right now America is still expecting, as long as I agree with Quincy 100%, as long as we can contain this contagion, then we should still have a firm 2020. But everything is going to be dependent on what actually happens with the coronavirus. At this point, what we don't know will actually hurt us potentially. Quincy,
let's talk a little bit more about retail, just in terms of the fact that we had retail sales out last week. They didn't largely beat expectations by a wide margin. What missed on Walmart is what's on our radar today. How strong do you think the U.S. consumer is at this point? Or does Walmart earnings, maybe should we read into that at all and see that maybe the U.S. consumer isn't as resilient as we initially thought?
I actually wouldn't. I mean, we could overanalyze it, but the fact is, as long as the consumer has jobs, as long as credit is available, this week we have a package of housing-related data. As long as that data remain solid and positive, the outlook for the spring will be good for the consumer in terms of the housing market. And the reason I mention the housing market is that it's crucial. It takes care of a profile of the U.S. consumer. Does the U.S. consumer have a job? Is the U.S. consumer optimistic? Does the U.S. consumer have the ability to get credit? All of those are encapsulated within the housing-related indexes, and that is important. The U.S. consumer still feels pretty good. All of the surveys, no matter where we look, the U.S. consumer is feeling confident.
Quincy, switching gears slightly to more on the political front. I know you're really plugged into the Wall Street scene. What are your friends in the industry saying, clients saying about a potential Mike Bloomberg presidency?
Anything can happen. I mean, nobody knows. We're in a world that is completely different from the world we were in even before 2016. So anything is possible. But obviously, on Wall Street, what Wall Street wants is a leader who respects capitalism, respects the markets, respects the ability of companies to do well, isn't going to impose tremendous regulation, and is one of the reasons that the market seems seems to think that President Trump is going to win again. And therefore, that's another underpinning for the market. If people always ask, why is the market moving higher? If the market believed, and that means the global market, all the market participants believed that we were going to have a much more progressive president, I think the market definitely would react with the pockets that are most affected. Healthcare is one of the ones. Managed healthcare is one of the subsectors that we are watching to see what Wall Street and all market participants think is going to happen.
Do you think Bloomberg respects the markets? These terminals are everywhere.
He's terminal, and
they've been everywhere.
Well, and he came from Salomon Brothers. It doesn't exist anymore, but he does know markets. He respects markets.
Jared, back to you.
Yeah, we got the NASDAQ 100 here, and we see we went over Microsoft and Apple before. The former up about 0.5%. Apple's now up about 2.5%, but Amazon and Alphabet and Facebook all up actually pretty nicely. That we saw communication services was up before. Intel is down, along with a lot of other chip stocks, of course. That's a China play, coronavirus fears. And then we have Tesla up nearly 5% once again over the last 3 months, 140%. Read a report over the weekend. I don't know if that's fueling the rally right now, but they did a teardown on a Tesla Model 3 and the electronics inside, 6 years ahead of Volkswagen and Toyota.
Rebecca, is your phone ringing off the hook on Tesla?
I especially when the analyst comes out and says 7,000, 14,000 potentially, but it's just unbelievable. And I 100% agree. The consumer is still really strong and has really strong sentiment. And the only thing that can set that is if the markets start to change. Now, I will say about Michael Bloomberg, as a tax lawyer, that we do comprehensive wealth management. We always look at the policies of these people, and obviously he's come out recently and said, he wants a lot more financial protections, and he wants to do a financial transactions tax, which is a problem. But also, he really he doesn't even believe in the 1031 exchange. He wants to eliminate the 1031 exchange. A lot of real estate investors aren't going to appreciate that tax plan and Michael Bloomberg's policies. So we really have to now start to see what he really is all about.
Well, I better hurry up and buy my house. We'll leave it there. Quincy Crosby, always good to see you. Rebecca Walser, Jared Blickery.